Welcome back to the Algobot channel, where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm Algobot, and today we're exploring a strategy called SafeZone Trend Reversal. It's built around a classic idea from Alexander Elder, measuring the market's background noise and using it to place an adaptive trailing rail. Over the next several minutes, you'll learn how this reversal system decides when to be long, when to flip short, and how it manages its stop and its target. Everything here is educational only, so let's dig in and see how it works. Let's start with the big picture. SafeZone Trend Reversal is an expert advisor for MetaTrader 5 that belongs to the trend following and reversal family. It can be applied to any symbol and time frame you choose in the terminal, though traders often study systems like this on major currency pairs such as EURist. The engine behind it comes from Alexander Elder's SafeZone idea. Elder observed that within every price bar there is a portion that pokes against the prevailing move, and he treated that counter-move as market noise. In a rising market, the noise is the set of downside penetrations, bars that dip below the previous bar's low. In a falling market, the noise is the upside penetrations, bars that push above the previous high. The strategy averages only the bars that actually penetrated, giving it a directional estimate of how much counter-trend wiggle is normal right now. It then places a trailing rail, a chosen multiple of that noise beyond the current extreme. The default multiple is 2.5. That rail is designed to sit close enough to catch a genuine reversal, yet loose enough to ride through ordinary chop. Importantly, the rail only ratchets in the direction of the trend. In an uptrend, it can move up, but never down. In a downtrend, it can move down, but never up. When price finally closes through the rail by a confirmation margin, the strategy treats that as a regime change, closes the current position, and opens one in the opposite direction. This makes it an always-in-the-market reversal system. It may appeal to traders who are studying volatility-adaptive trailing stops rather than fixed-distance stops. As always, this is educational information, not financial advice, and trading always carries the risk of loss. Now let's walk through the mechanics step by step. The expert advisor only acts on completed bars, checking its logic once when a new bar opens and ignoring the still-forming candle. That keeps its decision stable and avoids reacting to every tick. On each new bar, it calculates two things. First, an average true range over the ATR period, which defaults to 14 bars. This measures overall volatility. Second, the directional noise over the noise period, which defaults to 10 bars. To do that, it looks back over recent bars and, for each one, measures how far it dipped below the previous low and how far it pushed above the previous high. It averages only the bars that actually penetrated in each direction. If there has been no counter-trend penetration recently, it falls back to half of the ATR as a volatility floor, so the rail always has a sensible distance. From these, it builds two candidate rails. The long rail is the most recent low minus the noise coefficient times the downside noise. The short rail is the most recent high plus the noise coefficient times the upside noise. It also computes a confirmation buffer equal to the ConfirmFrac parameter times the ATR, by default 1/4 of an ATR, which price must clear to avoid whipsaws. When the strategy first starts, it has no regime, so it seeds direction from a short baseline. If the last close sits at or above the recent average close, it begins long. Otherwise, it begins short, and it opens a position immediately. Once a trend is set, the matching rail ratchets. In an uptrend, the long rail only moves higher. If the last close drops below that rail minus the buffer, the strategy signals a confirmed break. It closes the long, flips to short, and opens a sell. The mirror image applies in a downtrend, where a close above the short rail plus the buffer flips it back to long. Each position is protected by a stop loss placed at the rail itself, and a take profit set a multiple of ATR away, 3 times ATR by default. If a take profit closes a trade while the trend is still intact, the expert advisor rearms in the same direction, and between bars it trails the live stop up to the ratcheting rail. Let's look at the actual MetaTrader code on screen. At the top are the input parameters, and these mirror the strategy's defaults exactly. NoisePeriod is 10, the lookback for the penetration noise. NoiseCoeff is 2.5, the multiple of noise that sets how far the rail sits from price. ATR period is 14 for the volatility measure. ATR TP multiple is 3, which scales the take-profit distance. ConfirmFrac is 0.25, the whipsaw buffer, and lots is the fixed trade size. Below that is the core decision. When the trend variable equals 1, the strategy is long. It ratchets the long stop upward with mathmax, so the rail can only rise. Then it checks the key condition. If the last close falls below the long stop minus the buffer, that's a confirmed break. It closes the buy side, sets the trend to -1, records a fresh short rail, and calls open short. The mirror block handles the short side. When the trend equals -1, it ratchets the short stop downward with mathmin. If the last close pushes above the short stop plus the buffer, it closes the sell side, flips the trend to 1, and calls open long. Finally, look at the two order helpers. Open long reads the ask price, sets the stop loss to the long rail, or 1 ATR below entry if the rail is too close, and sets the take profit to entry plus ATR-TP multiple times ATR, then calls trade.buy. Open short does the exact opposite. Stop loss at the short rail above entry, take profit ATR-TP multiple times ATR below, and calls trade.sell. Both sides share the same symmetric logic. Let's bring this to life on the chart. You're looking at a sequence of candles with a single trailing line drawn over them. That's the SafeZone rail, the noise-adapted stop that this strategy trails. Watch how it flips from one side of price to the other as the regime changes. On the far left, the market is drifting lower. The first 3 candles print successively lower closes, and the SafeZone rail sits above them, stepping down bar by bar as the short rail ratchets in the direction of the decline. Because the rail can only move down while the strategy is short, it hugs the falling highs, staying a multiple of the recent upside noise, by default 2.5 times, above the market. Now watch the third candle. Price stops falling and prints a strong bullish close that pushes up through the descending rail. That upward penetration, cleared by the confirmation buffer, is the signal the strategy has been waiting for. The expert advisor treats it as a confirmed regime change. It closes any short exposure and opens a long. That's our buy entry marker. Notice the entry is not a guess about the bottom. It's a reaction to price actually reclaiming the rail. The moment the long engages, the rail flips underneath price and becomes the long rail. Over the next candles, 4, 5, and 6, the market trends higher and the rail ratchets up beneath it, locking in ground as it goes. It never loosens, it only tightens toward price. As the 4th and 5th candles extend the advance, the trailing stop follows a comfortable distance below, built from the downside noise so it can absorb normal pullbacks without being clipped. By the 6th candle, price has traveled the full take-profit distance, which the strategy sets at 3 times the ATR from entry. The take-profit marker shows where that target is met and the long is booked. This is the reward side of the plan, a fixed volatility-based objective, 3 ATR away, sitting against a stop that started at the rail. Now the market rolls over. The 7th candle stalls near the highs, and momentum fades. On the 8th candle, price prints a firm bearish close that drops back through the long rail, the very rail that had been ratcheting up beneath the uptrend. Once that close clears the rail by the confirmation buffer, the strategy signals another confirmed break. It closes the long side and opens a short. That's our sell entry marker. And again the rail immediately flips, this time sitting above price as the new short rail. From there the short trade develops just like the long did, only mirrored. Candles 9 and 10 push lower, and the rail ratchets down above them, tightening with every bar while never moving back up. The downside momentum carries price steadily away from the entry. By the 11th candle, price has covered the same 3 times ATR distance below the sell entry, and the second take-profit marker shows the short being booked. The 12th candle continues lower, and if the downtrend stayed intact, the strategy would simply rearm on the same side and keep trailing. So in one clean sequence you've seen the whole cycle. A downtrend with the rail above, a close back through the rail generating the long, the rail flipping below and trailing up to a 3TR target, then a close down through the rail generating the short, the rail flipping above and trailing down to its own target. The engine is always in the market, always trailing that noise-adapted rail, and it reverses only when price closes decisively through it. Remember, this is a simplified illustration for learning. Real markets are far messier. and losses are a normal part of trading any system like this. Let's wrap up. Today we explored the SafeZone Trend Reversal Expert Advisor for MetaTrader 5. We covered Alexander Elder's noise concept, how the strategy measures directional penetration noise and builds a ratcheting trailing rail, how a confirmed close through that rail flips the position, and how the stop loss sits at the rail while the take profit is set a multiple of ATR away. We then walked through both a long and a short example on the chart. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, subscribe for more MT5 strategy analyses, and leave a comment with the strategy you'd like us to examine next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.